In this video, we will be talking about the hot ICT concept that is liquidity. As we discussed earlier in previous video that price moves because of two reasons: to take the liquidity, to hunt the liquidity, or to balance any imbalance in price. These are the two main reasons. These are the fuel of price. Liquidity is basically the fuel of price. So let's understand what is liquidity. If you go into the market, you have heard that some of the assets are liquid and some of the assets are not liquid. What does it mean that the asset is liquid? The asset is called liquid if there are willing buyer and sellers readily available in the market. If it can be readily converted into cash easily, then it is called a liquid asset. Like the gold, if you take the gold to the market, you can sell it to anyone like the goldsmith or the willing buyers. You can get the cash. That's why gold is liquid asset. So in forex terms, in trading terms, liquidity means the willing buyer and sellers at the market price. Who are the willing buyers and sellers? You and me, the traders. If the traders at a point in price are available, are willing to buy and sell at that price, that means the liquidity is available at that point. So how does the liquidity refers in the trading? It specifically refers to buy stops resting above old highs. Above old highs, basically buy stop rest, and these buy stops are termed as the liquidity. And below old lows in the market. If you don't know about highs and lows, you can watch the ICT swing high and swing low video on this channel. So below old lows, the sell stops rest where traders willing to sell the price at the at the market price. These sell stop orders are termed as liquidity. No, because of the above discussion, we can differentiate the liquidity, or we can divide the liquidity into two types. First of all, the first type is buy side liquidity, which is simply termed as BSL. BSL means buy side liquidity. What is buy side liquidity? Buy side liquidity is basically the buy stops resting above the old highs. Above old highs, basically people want to buy. I mean, some of them, term the old highs as a resistance point. When price reaches those resistance and goes above that resistance level, some of them breakout traders will try to buy above these highs, and the old sellers who have sold below the highs will protect their trade by the buy stops above the old highs. Some of the traders use buy stops, some would use stop loss. Stop losses are basically the buy stops. So these two orders, the willing buyers and the stops of previous sellers above the buy above the old highs, are basically the liquidity, buy side liquidity. So how do price takes the buy side liquidity? This is an example of buy side liquidity. You can see this picture here. Let me just zoom it in. You can see this picture. We have an old high here. So people who sold at this point, at this rejection, have a stop loss above this high, or buy stops resting above this high. Price went up and took the liquidity. So after taking the buy side liquidity, what is the next target? Next target is downside. These lows, these lows. And again, we have an old high here. Those who sold at this point have buy stops resting above this high, or those breakout traders trying to buy the price above the high will be buying at here with their buy stops, price taking the liquidity and going down all the way, taking all old lows. This is called the buy side liquidity above the old highs. Now the second type is sell side liquidity. What is sell side liquidity? Sell side liquidity is simply termed as SSL. S means sell, S means side, and L means liquidity. So this is a sell side liquidity. What is a sell side liquidity? Sell side liquidity is basically the sell stops below old lows. Below old lows, those who have bought earlier have their stop losses below old lows, have their stop orders, sell stops to protect their buy orders below old lows, and the willing sellers below the old lows, I mean breakout traders, will put their sell stops below these lows. That's why below the lows, sell side liquidity exists. How to identify the sell side liquidity? This is an old low. You can see here price has targeted these lows. And the sell side liquidity, people who bought here at this point enjoying the profit here will have sell stops below this low or below this low, and people who want to sell seeing this aggressive candle at breakout will sell here, and price after targeting their orders, converting their stops to the active orders, then price goes to the upside. This is how price takes the liquidity. So this is the concept behind the liquidity, and there are two types of buy side and sell side liquidity. Now let's see this concept in the real market. How does it work? You can see here at this point. Let me just make it the higher time frame so we can look at the market. We have here the equal highs. Equal highs are the largest point of liquidity. Why? Because price has been rejected two times at this point, and traders are convinced that price will not break this level. This is a strong resistance level. That is why people will try to sell at this point. Okay, so this is a strong liquidity level. Now you can see price just tapped this level and wick does the damage, converting the stop orders into active market orders, and then price. This is the buy side liquidity. After taking the buy side liquidity, price is targeting the sell side liquidity. Where is the sell side liquidity? Nearest sell side liquidity at this point. Then at this point, price after taking the sell side liquidity, now price will target the buy side liquidity. Where is the buy side liquidity? Buy side liquidity, we have high here and a second high here and a third high here. You can see price has cleared all these highs, and this is the trend line liquidity. Price cleared this and then price went down where the target will be last sell side liquidity. This is the sell side liquidity. After taking the sell side liquidity, price will again move to take the buy side liquidity. Where is buy side liquidity? At these highs, at this high, and at this high. You can see price has cleared the buy side liquidity. After taking the buy side liquidity, price is going down to take sell side liquidity. The last target is here at this level, and we have a last liquidity level, strong liquidity level at this point, and price has cleared this too. Now, as price has cleared these liquidity levels, where is the buy side liquidity again resting? Buy side liquidity is resting now above these highs, this and this. Price will go up and clear these highs and engineer the liquidity, then price will come down and take this sell side liquidity. This is how price moves from one liquidity level to the second liquidity level. Price always seeks liquidity. Price moves because of liquidity. Liquidity is the fuel of price. If you can understand the liquidity, if you can spot the liquidity on chart, no one can beat you and your direction will be right. So this is how you spot the liquidity, buy side and sell side liquidity. In the next video, we will be talking about the internal range liquidity and external range liquidity. If you liked the video, do comment, and if you have any questions, your questions are welcome. You can comment your question. I will make a video on your questions and I will try to clear your thoughts. I wish you good luck for your trades. Take care. Goodbye.